Okay, so welcome everybody to the Liquidity Fader webinar. It's been a couple of weeks since we've had this webinar. Obviously, I hope it was worth your time because in the past 2 weeks we've had Jimmy on, and if any of you guys was sat there watching Jimmy, I hope you enjoyed it. He's a really good guy, and he really knows his stuff, and just the stuff that he talked about in those webinars to do with looking at the fundamentals, and all of that. Good stuff. That really is the essence of successful trading in the long run. What he's been doing is he's been doing that over the last 30 years. And, go back and watch that. Go back and watch it, especially the first one when he talked about the fundamentals, because that really, particularly for a system like this, can keep you on the right side of the markets. Okay. So anyway, what we'll do in this webinar is we'll take a look at the charts as always. Once we've looked at the charts, we'll then open up the floor to any questions. And one of the topics that I will talk about today whilst we're looking at the charts is the topic of high price resistance and lower price support. The reason being is that we've had a couple of emails for people saying they're not quite sure how to identify them and what really constitutes a level that you would want to trade. So I'm going to do my best to go back over that again today. All right. We're going to start off by looking at the dollar franc chart. Now, I don't know if you recall, but from the video on Sunday, ultimately the markets were making, we talked about the dollar franc and we said that we like it because the markets had been making lower lows, but of recent times, the lower lows haven't been quite as exaggerated. And the higher highs then there haven't really been lower highs. So the highs have been starting to break through the previous highs, which sort of tells us that we're moving into a range-bound market. And that's quite a good thing for this sort of a system. We like range-bound markets because they're the sorts of markets that we can really trade the support and resistance. So we can buy support and sell resistance with, a good deal of accuracy and quite a lot of confidence. So the fact that we're moving into that sort of a market is good for us, okay? So at the moment, we're waiting for the dollar franc to get down to this level here. This is the lower price support. And why is it? Why is it this level that we're looking at? The reason is that this is a clearly defined level. The market has come down to this level with momentum. Okay, so it's come all the way from up here down to here. And it's moved, it took a little bit of a bounce, and then it came back down to a big momentum candle into this level, and then got rejected. And it's important to see what happened after it. Look at the reaction to this level. Massive rejection to the level up to this point here. Now it's coming back down to with the momentum again. So how does this differ, for example, from another level? Well, let's look at this level over here for a minute. Let me just try and annotate that, if it works. Okay, so I'm going to look at this level here because some people will say, well, why wouldn't you look at that level as being a lower price support, all right, in isolation? Forget the fact that we've got this level over here, but if we looked at this one here, why don't we like that? Why would we have not looked to have taken the liquidity fade from this level here? Now, as it happens, if you would have taken a liquidity fade from that level, it would have made you money, but that's besides the point. What I'm trying to illustrate to you is why we wouldn't trade levels like this, all right? And the reason is, let's get rid of that in a minute. The reason we wouldn't trade a level here is look at the reaction to that level. You've got all of this momentum coming down into the level, and that isn't really a reaction to it. That's just the market doing what it normally does. It hasn't completely gone, rallied off from that level and then come back to it. It's literally a little bit of a bounce and then it's come back down to the level. So we wouldn't take this as a level that we would consider a lower price support. Instead, if we were trading this level, we would look back at this level over here, this being the more important one, okay? So that here doesn't constitute a support level that we would look at trading. We want a bigger reaction to the levels. For example, this one here, where the market then rallied off from it quite significantly, when it came back down there, if we got a liquidity fade at that level, we would be well willing to take that. But this previous one here just doesn't make any sense. All right, and I'll try and show you a few more charts in a second. So the dollar franc is moving down to this level, and if we get a liquidity fade from here, so if we get a break through this level, significant breach through this level, then we see that the big money comes back into the market and pushes it back above that level, and we get to close above that level. we're going to be looking to take that trade. Now, the only problem that we have is in terms of danger zones. Okay, so the first danger zone is going to be this one over here. The fact that the market is bouncing from that level again makes it a little bit more significant. So we will have to keep an eye on this level when we get the liquidity fade to decide whether or not we've got enough potential profit on the target for the risk that we're going to take from it. So that's the dollar franc. We'll now look at the pound New Zealand eventually when it loads. So the pound New Zealand, again, we're waiting. Pound New Zealand over here, we're waiting for the market to get up to this higher price resistance over here, this HPR. If we can get up to that level and we get a liquidity fade from that level, again, we'd be well willing to take it. We need to keep our eyes on this level, which is the first danger zone. But potentially looking at this market here, it's not really making any significant highs. You know, each high that it makes is sort of labored. It sort of, you know, pushes above there oh so slightly and then breaks back down. Pushes above a little bit and then breaks back down. And we're anticipating the same sort of reaction to this level if we get there. Right, now what is quite nice to see, and I'm going to bring the weekly chart in here for you to have a look, is just how significant the level is that we're playing with at the moment. Okay, so the level that we have, this one here, this is what we're waiting to get broken at the moment. All right, if we go back in time, look at how significant this level has been to the pound New Zealand. So this massive downtrend over here caused this level caused a little bit of a halt to this downtrend over here. We've got a little bit of a bounce from this level. What was it? Sort of a couple of hundred pips, 200-300, well, a few more than a couple of hundred, a couple of thousand pips, sorry. So it's quite a significant level, if you'd agree. And the fact that we're trading up to this level and we've got a HPR at that level just makes it, you know, all the more significant. Plus, if we look at it from a weekly perspective, we're in a downtrend. You've got the 200 SMA that it's playing with as well. So we've got a lot going for this trade. So if we can get a nice liquidity fade from this level, that is going to represent a very, very high probability setup. So we'll need to wait and see what happens. But at the moment, that's one that we're watching like a hawk. The Euro franc is the other level. We've got a bounce from the 122, the 122.100 handle, but that's not a problem. We're waiting for it to get down to this lower price support over here. If it does, we'll be looking to take the liquidity fade. If it blasts through and it gets down to here, again, we'd be equally as willing to take it from this level. In fact, we'd probably be happier taking it from this level than we would taking it from this one over here. Why do we like the Euro franc? Well, I talked about it a little bit during the webinar, not the webinar, the video, the update. But again, I'm going to bring the weekly chart into play here just to show you how significant that level is. So back in 2010, 2011, we had a massive sell-off of the Euro franc. You know, it was literally just a one-way play. Then the Swiss National Bank got involved, and they started to say, you know, we're going to defend this. The Euro franc cannot go below the 120 handle, which is this one over here. Look at that price action there. Seriously, look at that. The markets are not willing to take on the Swiss National Bank at that level there. Now, I know that's not the level that we're actually looking to trade from. We're looking to trade from this one around here at the 120, 160-ish. But this should give you some confidence that as the markets get down to that sort of level there, they're going to get more and more nervous about holding their shorts. All right, and the more nervous they get, the more likely they are to want to get out of their positions extremely quickly if they don't get the sort of price action that they're looking to get from there. Okay, so what does that mean for us? Well, ultimately, get rid of that again. Ultimately, if we get down to this sort of level here and the market breaks through it, okay, so the market breaches that level and then comes back up and gives us a liquidity fade, then we get aggressive buying. That's the market's telling us that ultimately it doesn't want to be anywhere near the 120 handle. Why? Because there's no profit. They're not going to make any money from being short the Euro franc. They're only going to make money from buying from this level here. And at the moment, it's quite a good level to buy from because we can expect a move up to sort of, not immediately, But there is scope for a move up to the 126, which is the most recent resistance level after the Swiss National Bank got involved. Okay, so there's, the big traders will be looking at this and saying, well, it's not going to go below there. So if we can find a place to get in long, they'll be getting in long and looking to hold it up to the highs. And their potential risk reward, when you think about it, let's imagine they get in at 120, 130. Okay, just hypothetically, they get in at 120, 130, which is a liquidity fade from this level here. They may say, well, I'm going to put my stop below the 120 level because I know it's not going to get hit there. What's that, 100-point stop? Then they're going to be looking at these highs here, these highs up here. So potentially, if they were just to trade it up to the highs there, the 126.50 level, they've got, what, a 500 pip move for a 130 pip stop. All right, so they've got a 4-to-1 risk reward. And they know that absolutely the SNB are going to defend that level. So they're kind of protected below that level there, all right, unless the Swiss National Bank decides to step out of the way, in which case we'll see this crash through the floor. But they haven't done that in the past year, so we can be quite confident they're going to defend that level for quite some time. Okay, so from their perspective, they'll be saying, well, we've got a 4-to-1 risk-reward ratio on there. All we've really got to do is wait. And if we can wait, we should see some profit from that particular trade. And that's why we like the Euro-Franc trade. Then look at the CAD-Yen. The CAD-Yen is threatening to come down to the lower price support here. We could technically take a trade from here, but at the moment, from my perspective, just looking at this price action here, the way that it's playing with this level is that I want to see an aggressive reaction to the upside, okay, not to the downside. If we analyze these candles here, what this is ultimately telling us is that let me zoom into this chart a little bit more for you. Look at that candle. At one point in time, that candle was very, very bullish. It was all the way up here at 93.21, so 100 points above where it was, all right? That was yesterday. It then managed to sell off and it closed towards the low of the candle. That's negative, all right? Because it was all the way up here. Again, this one here, we're getting a little bit more indecision. So it didn't quite try and rally as hard and it tried to go down a little bit lower, but the market is rejecting lower prices, which is what we want to see. But ultimately, to take this trade, to convince me that I want to be in this, I want to see an aggressive break either below this level here or an aggressive, like a bullish candle, very, very bullish candle in and around this area here. I want to see the market, if we're going to trade from this level, I want to see the market close up towards this sort of area here, 92.50 type level. If we get it below there, an aggressive sell below, then just a close above here will be good enough for me. Does that make sense to you all? Any questions on that? No? Okay. Then the other one here is the Aussie yen. At the moment, there's nothing really very much to say about this because this one we're waiting for it to come down to this level here. It hasn't made it down as of yet. So it's just really a bit of a waiting game. At the moment, it is reacting to this level over here, but this isn't our lower price support, so we wouldn't be looking to take a liquidity fade from this level. Okay. All right, so that wraps it up for the charts that we're looking at currently. I will now open up the floor to any questions you may have. So please feel free to type your questions in the chat box. If there's anything you want me to talk about, if there's any chart that you want me to take a look at, we can do that too.
I'm off now. It's Randall here. I'm off now. Alex, thanks very much indeed. Really, really helpful stuff.
Excellent. Good stuff, Randall. I'm happy you enjoyed it. Well, have a good evening, and I look forward to speaking to you on Friday for our call.
Until then. Thanks a lot.
Take care.
Very good.
Okay. Anybody else? Any questions at all? No questions whatsoever? Looks like my Chihuahua's got a question. Okay, did you guys understand what I was saying about the lower price supports and higher price resistance? Do you get what I'm trying to put across there? That ultimately, when we're looking for these levels, we're looking for a reaction to them. Okay, if we don't get a reaction to the level, then it isn't a significant level. So for example, this over here, if I highlight that, this over here is not a level that we would be, you know, really looking at, because there isn't much of a reaction to that level. The same goes with this one over here. There's no huge reaction. The market kind of goes up to it and then moves sideways. What we want to see is a rejection from the level. We want to see that the markets are clearly rejecting higher prices in the case of an uptrend, or rejecting lower prices in the case of a downtrend. That's what we want to see. So for example, this one over here, if the market came back to this level after that sort of price action there, we would look for a liquidity fade from that level. But these over here, they don't make any sense. That's not, you don't want to be involved in those types of trades because it isn't a clear rejection to a level. Does that make sense? So you're looking for momentum into a level, and then you want to see the markets clearly rejecting the level. That is what would constitute a higher price resistance or lower price support. So that there, this is a level that we would look at. This is a level that we would look at. This here, that is not a level that we would look at. That doesn't make any sense. That there, that's not a level that we would look at. Okay? Over here, however, that's something that we would look at because we've got clear momentum into it and then nice rejection from it. Okay, we don't have the market going sideways. We want to see the market get down to a level, and then the level basically looks like it's a brick wall. That's what makes sense to us. And that's how you know that's how you know that a level is significant enough that you can anticipate some sort of a rejection to the level. You see what I mean? This here, this you could look at as being a place that you'd look for higher price resistance. Why? Because we've got momentum into it and the market sells off very, very aggressively from it. So the next time we come to it, the people that were selling here, okay, we know that's going to be in the market's rear view mirror. All right, so the people that made money here are going to want to make money there again. All right, the big traders know that. They know that there's going to be a hell of a lot of stops there. So if they can just trigger all of these stops behind this level here, then sell into it, they know that they'll be on the right side of the market. And as soon as everybody else sees that the market is going to sell off from this level, all of the guys that were selling here will start selling here again. Okay? And to be successful trading, boys and girls, you need to think about the story of the markets. That's really where you have to be at. You can't just look to trade a signal in isolation. You need to look at the context of the markets, see what it's doing, and make an intelligent decision on whether you want to take the trade or not. You don't have to trade every signal, every level. Think about what the market's doing. Think about the way that it previously reacted to a level. And that will give you a clue as to whether or not the trade that you're looking at is a high probability trade. Now, does it mean it will make money? Absolutely not. We can't know for sure if any one trade is going to make money. We can only read the clues of the market, and we can only put ourselves in the best position to take advantage of it. Okay? Okay then. If there are no other questions, or there wasn't one question. One question here. New Zealand CAD. That was not one that I personally was looking at. Let me get it up on the screen here for you. No, again, I personally wouldn't have taken this trade, Aubrey. The reason is that I haven't seen enough of a rejection to that level. For all I know, this is just part of a bigger swing. What you want to see is the market come up to a level. So you want to see the market come up here, and then you'd want a rejection down to somewhere like there, and then the market to revisit it. Okay, this here, this can be just, ultimately the market just going into some sort of consolidation phase or something like that. That doesn't represent a high probability trade from my personal perspective. Does that make sense, Aubrey? Exactly. A bigger rejection. Any other questions? Okay, well, I hope you all found it useful. I really do. If there are no other questions, we'll wrap it up here. And I'll look forward to putting out the video at the weekend to see what has triggered this week and also to see what's setting up for next week. Okie dokie. Okay then, people. Thank you very much for joining. As I said, I hope you enjoyed it, and I will speak to you all next week. Okay, so take care now and good trading.